Good morning, friends. How are you all doing? Wish you all a lovely Tuesday. Wish you all a very, very happy and profitable trading session today. And I will make sure that you don't miss on any opportunities. You don't miss on how to act in the market. Hope you had a great day yesterday as well. I had warned you about the markets. It may take a small pause. I had given you numbers, suggested you to keep booking your profits and be precautious because markets are quite euphoric. Everyone feels like they can make money, and when this happens, that's the time to be fearful. Remember what Warren Buffett has said: buy fear, sell greed. So it's a kind of greedy market. If you take a look on Nifty's P ratios, it's at 20 years high. Come on. Our markets, our economy have just gone through a massive pandemic hit, and 20 years high price to earning ratios are quite deviated, not at all justified fundamentals. Though I'm not asking you to short sell right now, there would be the time when I will myself tell you, go ahead, be aggressive, short sell. Rest, follow the numbers. Remember, charts are the only tools that's going to help you read the market. See, if you will try to predict the markets, you will fail 90% of the times. But if you listen to the markets, what exactly the participants are saying, what exactly the activity, the price action, the volume. Because see, the price action is formed by collective efforts of all the traders like you, traders like me, traders like some HNI fund manager, somebody in holding a mutual fund or a foreign institution. Stock market price action is the combined activity reflecting in the price. If there is a news, it's there in the price. If there is a any crash going to happen, it's there in the price. Everything in the price. Charts are the only way how you can analyze what exactly the market psychology, what exactly the overall market participants want, and that's the way how you can make your money. So having said that, let's quickly jump onto the data and understand how exactly you need to be planning your trading session today. I'll share the numbers, I'll share the data, everything, all that you need to know. Remember, this is Ask Abhishek Raj Morning Dossier. Every day I gear you up for how to manage your trades, your positions, your profits, your losses. What is the best way to act? So let's look at the data. What exactly data has got today for us? Starting with the indices, it was a kind of flat market. Banknifty was negative by 0.56%. Nifty IT was the great performer, positive by 1.67%. Pharma indices were positive. Consumption, the FMCG sector was positive by 0.3%. Rest all of these other sectors like financial services, energy, metals, infrastructure, auto, reality, PSU bank, media, all other sectors were negative in today's trading session. Now, if you take a look on fund flow, it's a kind of flat to negative, I would say. Now, the reason I'm saying flat, because we have got a small buying number that's approximately 800 crores by foreign institutions in cash market. Cash buying is done for the longer term view, and the short selling that's done into derivative, they are always short term views. So that's the only thing positive, 800 crores of buying. Rest, the entire number is negative. Domestic institutions sold about 1000 crores. Foreign institutions sold index futures worth 700 crores. They sold index options worth 1217 crores. Stock futures were sold about 947 crores. Stock options were sold about 167 crores. Now here is the game. Markets were up, it fell down. Lots of index options have been sold. So majorly in today's session, we saw a good amount of call writing happening on the higher levels. Now, what does a call writing means? It doesn't mean markets are negative. It means it's not that positive. See, being not positive is not being bearish. Being bullish is a kind of momentum that markets are going to go up. When you are not bullish, it's a kind of flat to negative to positive market. It's not bullish doesn't mean it's bearish. When we talk about bearish markets, we talk about 10, 20, 15% negative downside. So that's not going to happen right now. Rest volatility index was up about 4%, to be more precise 3.7%. So that's something to worry about, because it looks like on higher levels some hedging is happening considering the US elections, which are around the corner right in the next month. Overall volatility rising again, as I discussed, that's not something good. Now let's take a look on how Nifty has got the chart on charts, how Nifty and Bank Nifty look, and how exactly you should be planning your day. If you remember in yesterday's session, I had told you that Nifty as upside, the first resistance would be 12,050 levels, and Nifty reversed exactly from 12,030 to 22 levels. So more or less in futures it was about 12,050 levels. So it's the same resistance range that we had talked about in yesterday's session, which played a crucial role. And yes, you did avoid buying and you didn't lose anything in yesterday's session. Let's take a look on what exactly are the numbers that you need to be looking at. First of all, if you take a look on Nifty's chart, the yesterday's candle is a kind of a spinning top with a negative candle. That is, Nifty closed below its opening price. It didn't go that much, and didn't even go very much positive. It was kind of flat market. Now spinning top candle is an indecisive candle. Now indecisiveness in a bullish market is in itself a bearish candle. So in my personal recommendation, you need to be waiting for some good lows or maybe a nice correction or a dip in order to start buying, or for a breakout above yesterday's trading sessions level. So few numbers to keep in mind. The first support level that we are looking at, 11,787. That is the high of the day when Nifty made its last high on 31st of August. So that particular level that was acting as a resistance should be acting as a support now. So be watchful for that number. Rest on the upside, you have the same resistance, that is yesterday's high and 12,050 levels. In case it goes up, we could be headed towards a new all-time highs altogether. Rest as per the Fibonacci retracement levels, in case markets continue to trade below 11,800 levels, that's 787 to be more precise, we could be looking at 38% retracement of 11,550 range, followed by 11,400 range. That would be some 50% retracement. So these are the numbers to be watched on Nifty. Volume was not that much higher in comparison to yesterday, so no aggressive and much of selling happened. RSI and MACD, they are both positive as of now, so I would suggest buy on dips should be your strategy in current market scenario, unless and until we, again, as I said, buy on dips means buy only on dips. Don't buy on the top of the rally. You could be losing in that case. Now let's take a look on what exactly Bank Nifty has to say. So if you take a look on Bank Nifty, it's a Bollinger Band. It's where Bank Nifty is facing resistance. Now, again, just like Nifty, Bank Nifty has also made a spinning top candle that's kind of negative. So on the downside, the support that you could be looking at is 23,209. That's quite deep. So Bank Nifty, it's something that you should be avoiding as of now. RSI, MACD, they are both positive. And yes, the day before yesterday's session, that was the Friday session, could be acting as an important price range. So that's about 23,200 levels. So I would suggest buy in case market sustain above 24,200, or buy lows around 23,500 levels, so that you could have a clear stop loss of 23,200 levels. So that's about Nifty and Bank Nifty. Let's take a look on other indices, and in case we have any opportunity in stocks, we will figure that out too. Now, as I said, Nifty and Bank Nifty, my personal view is being indecisive, so I would suggest no trade. Rest, we would be looking forward to buy in case we get a nice dip. Rest will avoid majorly. A metal index is range bound to negative. No trade. In case of weakness, this would be the first sector that we'll be picking up to short. Yes. Nifty IT view is positive. However, it's quite deviated from short-term moving averages, so trade with caution. But you can go long. Pharma is positive to range bound, so buy on dips. Wait for the dips to buy the pharma stocks. Energy is negative. You can find short selling opportunities. Nifty auto is negative to range bound, so I would suggest sell on rise should be your strategy on Nifty auto. Now, stock recommendation today, I would not be giving you any stock recommendations because our overall view on the markets is indecisive. So unless and until markets are indecisive, I would personally want to avoid. Now, there's a very famous approach that we call a top bottom approach. Now, what is a top bottom approach? First of all, you make a view on the markets. What exactly your view is on the markets, because eventually the overall market momentum is going to drive the entire market. Then you take a look on the sectorial view. Now, in case whatever sector views that matching as per your view, you trade into that and you drill it down to the specific stocks under those sectors. So having said that, as our top approach, that is the indices, that's indecisive, so we will prefer no trade in today's session. Rest in case some dynamics change or we get any clear short or a long view, our first preference would be buying FMCG and IT stocks and selling energy, metals and auto stocks. So these are the sectors that you need to be keeping on your radar. I'll repeat once again, your sell radar should be energy, metal and auto, and your buy radar should be IT and FMCG stocks, and yes, pharmas too. Rest bankings, wait. So that would be all in today's trading session. Hope this information is going to help you a lot in your trading and hope you make lots of money. God bless you. That would be all in today's trading session. Abhishek Raj signing off. Stay healthy, stay wealthy, and don't forget to like, share and subscribe. Feel free to comment, ask me any question, any doubt, any query that you may have. Abhishek Raj always at your service. Thank you so much.